Ferrexpo defies the odds to keep Ukrainian mines running. Well, that's a good way to start into it. This is the world's third largest exporter of iron ore pellets in the world. Their ticker symbol is FXPO on the London Stock Exchange, and they're currently trading at £1.26 over here. Now, they are headquartered in Switzerland, but their operations are run from mines in central Ukraine. Of course, being with the conflict that is going on, very close to an active war zone, and that has affected quite a few things at the company, such as suspending their next dividend. Now, is that the be-all and end-all of their dividends into the future? Possibly not, but we're going to have a look at a few things here and see what they're like for a portfolio. Now, dividend yield there of 30.51%. Now, it is between 12% to 30% depending on if they were to have made their next dividend payment, which they didn't. So, Simply Wall Street has it about 13%. Dividend Watch and Dividend Max have it around 20%. So, I will be using 20% as a good baseline. It's quite reflective on their last payout. As you can see, in the last year, they were trading at about £3.2, even £2.90 in February, and obviously due to the war in Ukraine, they have dropped down to about £1.27, which is a third, essentially a third, well, yeah, about 60% down due to the conflict. Now, there is a few other factors that we must, take into account here, because you can see they were trading at £4.33 back in July. That's because the iron ore prices were through the roof, and Ferrexpo were doing very well off it. Now, because they are continuing operations, they are obviously going to be they have their logistics, they have their transport for all their iron ore. There is quite a bit to this company. There's plenty of investments. The war is just the thing that is hanging over, providing a lot of uncertainty into the future of Ferrexpo. Disclaimer, I do have shares in the company in my UK dividend portfolio. It's one of the only ones that I know isn't actually continuing on the next payment. But I am an optimist, and I hope that the conflict is resolved very, very soon, sooner rather than later. So yeah, let's jump into it. I have 5 resources that I'm going to be using today: Dividend Watch, Dividend Max, Simply Wall Street, Alpha Spread, and Trading 212, all of which are useful for dividends, for looking into stocks, and for trading them. They're all free resources. I will have a few links in the description, some of which are affiliates, so if you want to support me, feel free to use them. Without further ado, on to the first and best thing. Well, iron ore prices. Almost forgot I even had this up. Did want to change it up because I wanted to show you the actual commodity prices. When their price was at its highest, obviously back in 2021, you can see that iron ore was actually trading at £2.20. I think that's how it's measured. But anyway, 220.4. It is now down to 98, which is again half. So again, for a company that is really reliant on the price of iron ore, that's not a great thing. Lower prices mean, everything the mine's worth less. Not worthless, worth just slightly less. Okay, on to their website here. Delivering sustainable growth. They are the third largest exporter of iron ore pellets, a high-grade form of iron ore that helps to lower carbon emissions in the steel chain. They have plenty of Caterpillar dump trucks here, as you can see. Lots of company news, a few things going on, and we will be looking through quite a bit. If you do hear a bit of rain, there is currently a storm outside, and I can't really silence it at the moment, but we continue on. Right, what do? I actually want to see the projects maps because I want to just show you where their mines are based. Their mines are here. They also have a port in Odessa in Ukraine, and they have quite a few... They've lots of barges and logistical networks that they use for transporting their iron ore to and from. I think the port in Odessa is closed at the moment because of obviously ongoing conflict, and they aren't very close to they're close enough to the front lines. I'm trying to remember. I think the front lines are sort of round about here. So they're still there, and again, we have seen from articles they are still, in fact, running the mines. Let's see here. We can go over to their production and growth. You can see a wee bit. of their production in terms of kilotons. That is quite the drop into Q3. But the positive side is there's production. They haven't completely shut down, so there is a bit of good news in all of the unfortunate situation that it is. We can see here that obviously it is iron ore that they do specialise in. I do want to pull up their it wasn't the logistics map. Where is it? It is about the investment timeline. That's what I actually wanted to see. So we can see here their major projects by year. So 2007, they were listed on the stock exchange. Then, going down, they invested more, and they got some CAT 789 fleet of haul trucks for mining at their main mine, FYM. Going into 2010, exports increased to 99% of sales. Carries on to 2011, where the first iron ore was actually mined at the mine FYM. It's got quite a long name. I'm not going to try and pronounce it, so we'll just carry on. Approval for multi-year investment in 2012. Then this is where things get quite interesting. They invested in 267 rail cars and a fleet, taking the fleet to 2,200 rail cars, ordering 300 more. They then go on to invest quite a bit in the community in the surrounding area in Ukraine, building apartments, community centres, and it's good to see a bit of investment in the community around the mine. Workshops, they modernised the workshops at FYM for mining fleets. Let's see, good news. Let's see, more investing, drilling work, all up until 2021, where they were actually an additional pelletizer capacity. They also run an actual processing plant for the iron ore once it's mined. So that's another useful thing for all the rail cars. So they really do have quite a broad range, sort of top-down approach, in that they mine the ore, they process the ore, and they own the logistics to get the ore from place to place. That is a fantastic business model, I must admit. I think it actually says it here in their business model. Yeah. So they have the long life asset, which is the mine. Operation and workforce, they do the mining. Premium products, the iron pellets and the ore, go to premium customers, and prudent financial management. Obviously, again, having the logistics and all of the in-betweens. Fantastic business model, to say the least. Plus, they invest heavily in all of it. And once you get down to the finances after making the money, they then return it into operations and workforce. And the cycle continues. Let's see, anything else we can have a wee look at here? You can go over to the investor side, always a useful thing to find. It says a lot about their share price, then it goes into financial calendars, their general meetings. Production report for Q3, as was seen, it is down. I think it goes in here to explain the situation as it stands. They are deeply they continue to protect the health and safety of workers on the ongoing. Is deeply saddened, having been notified of 8 workers that have died while serving in the armed forces, because a lot of them were recruited and obviously went off to fight. Total iron ore pellet production of 0.8 tonnes, representing a decrease of 68%. Obviously, the war is a massive factor in all of this, and it is something to bear in mind. It's not definitely one of those investments that you just don't really know, because there is such a massive world-changing event occurring on the sidelines of all this. Going over to Dividend Watch. Now, Dividend Watch is one of the dividend tools that I use to look at a company's dividend. A lot of uses of the word dividend there, wasn't there? Gives you a wee bit of information in the company, where it operates, and obviously the share price. As you can see, collapsing down to £1.27 where it stands at the moment. I did invest only a couple of days ago, so this is sort of the price that I landed in at. Dividend yield 21.22%. Don't take that as the main statistic for this, because they have suspended their dividend at the moment. You can see they were sort of between 3 and 6 dividends per year. Still paying out a massive yield, like Rio Tinto and BHP and other mining firms. They got a good run the last year or two, and commodity prices were very healthy for this industry. Now, of course, you can track everything on this. You can even use a wee calculator. on Dividend Watch, which again is very useful. Goes into quite a lot of the in-depth analytics. You can get the CAGRs, you can get debt to equity, you can find dividend yields, payout ratios. Then you can go to fundamentals, which again you can have a look at. It hasn't actually updated for 2021, but you can see growing year on year, their net income, their net cash flow, and their total liabilities. Liabilities actually dropping whilst the other two increasing. So the company was performing exceptionally well until the elephant in the room, the obvious war that has occurred. There is one other wee thing I wanted to use. Well, we'll jump on over to Dividend Max here, shall we? Dividend Max, Ferrexpo again. Just another way of looking at it. You can see the wee annual dividends where it does climb massively in the 2021, reaping all the near doubling of iron ore in the year previous. Actually it was 2021, the iron ore doubled. So they enjoyed quite a bit of returns from that. But as you can see, their ex-dividend date was in June there, which again was still in the war, but they've suspended their next one as production has collapsed nearly over 68%. So something to keep an eye on. Never know. I believe they will restart their dividend payment. I think it's near inevitable. But again, it all just comes down to how quickly the war is resolved. Hopefully as peacefully and as least bloodshed as possible. But again, this is the world we live in. Investing is sadly an emotionless sport at times. Unless, obviously, if you invest with values and ethics involved, obviously you will have a completely different portfolio to someone that is looking for massive growth and opportunities. Going over to Simply Wall Street. Now, Simply Wall Street is another website I use for analysis. A lot of you are very familiar with it at this stage. If it's your first time joining me, well, thank you, and hope you're enjoying the content. It gives you a bit of information on Ferrexpo. Going down here, they have an unstable dividend track record. That can be kind of wrote off with the fact they're a mining firm alongside the war. Volatile share price, large one-off items, and profit margins are lower. And good news is it's 79% below its fair value. Now, it's on a discounted cash flow model. We'll be looking deeper into that. Forecast is to grow per year. The rest of those, it's hard to tell, but they have a flawless balance sheet. You've seen financially, they were very, very healthy indeed. Down to valuation, they have a 2.9 PE ratio at the moment. Now, that's obviously because of a really low stock price. A few of their competitors are kind of listed there, but again, not really looking at the competitors on the website because the competitors can be hit and miss sometimes. Their fair value was about £6.3, and as you can see at their height, they were about £4, which is not too far off, providing commodity prices are going well in iron ore. But yeah, £1.27 is massively undervalued for the company. Down to future growth of about 2.5%. Of course, they are going to collapse over the next wee while, and it will take some time to recover. And commodity prices is another thing you have to factor in. You can go to past growth, where free cash flow, everything was looking up and up all the way till 2021. Of course, there was a decline, but again, commodity prices were, collapsing as is. So, just kind of sped up the process of things going downhill. But again, the commodity prices may have maintained and things may have continued to stabilise. That is a possibility. The war's thrown that up in the air. Down to financial health, this is one of my favourite parts of Ferrexpo. Their debt to equity ratio, the gap has grown massively up until 2022. But their short-term assets to liabilities, fantastic, and then long-term, even better. We can go down. They're debt-free. That's a really, really rare thing. And as Peter Lynch always says, it's very hard for a company to go under if they're completely debt-free. Reducing debt's grand, debt coverage, that all doesn't matter, and it's all green all day. So a very healthy company, given the circumstances. That's incredibly impressive, and their bounce back should be quite notable due to this, in my opinion. Obviously, none of this is financial advice, but they have them down at 13.97%. It's not stable, and the dividend per share, to be fair, was growing. It exploded in 2021. We know why that was. And it collapsed in the 2022. But by collapsing almost just pre-2020 levels. So, again, Cash payout and earning payout, also perfect ratios. Nothing. If it wasn't for the situation right now, they probably would be trading between £3 and £4. That's probably a given. Commodity prices, we don't know what they would have ended up being had this not happened, but I could imagine they wouldn't have went that bad. So again, things to consider. Down to ownership. Who is the top owner in this company at the moment? Some guy actually on the board of directors. Konstantin? Is that how you... Zivago or so? I'm butchering that, but there's BlackRock and there's Vanguard and Schroeder Investment Management, the usual suspects at the top of the ownership of a company. Moving on over here to alpha spread. Alpha spread is another way of looking at a valuation of a company by using intrinsic value. Intrinsic value is similar to the discounted cash flow model. It's just a different way of calculating it. But you can go into what it is. I highly recommend you check out alpha spread and you look at how it is calculated so you can see exactly what it is. I think this gives a tiny description. Yeah, it's basically debt liabilities against cash, revenue, free cash flow, and net income, based on a few other financials. At the moment, they put them at base case is about £3.4. Worst case, they're £1.6 and they're overvalued. But base case, which is normally what we go for, is 58% undervaluation. Now, simply Wall Street's discounted cash flow model had it at 79. So 58, 79, you can see that they're both kind of saying that it's undervalued. Best case, again, is nearly £10, nearly times 10 what it is now. Maybe that is extreme, of course, it is best case. Jumping over to the stock brokerage that I use is Trading212. They have an offer on at the moment. If you sign up for them using my link, you get a free share, and I get a free share as well, which is a pretty neat thing. If you were thinking of it, that's just a wee option there for you. And just wanted to point that out. But again, it's very similar. I'm using the dark mode on Trading212. Ferrexpo gives you the ticker symbol. Stock, it's in the UK. I'll say if it's an ETF here, if it is. You can obviously check the chart. Use an advanced chart. Says how many shares I have at 100. At 100 shares, £126 value. Don't know what fell there. CEO, again, quick wee rundown. Actually might have a few things here. Operates 2 mines, a processing plant. It's got a port interest in the port of Odessa. Fleet of vehicles on the Rhine and the Danube waterways, a part of their logistics. And mineral properties lie within... they're being extracted. They're the 2 mines then. Goes on to say where they're based. Industries, market cap, pay ratio, revenues. And then you can look at a few of the charts here. Again, from 2019 to 2021, things were looking up. They were reducing their liabilities, increasing their revenues and net income. And cash flow. Cash flow to me is an extremely important part of any business, especially a dividend payer. So seeing such a massive cash generating business, I'm on board. However, the future is a little dicey, so be sure to check out my next portfolio video where I talk a wee bit more in depth on my decision making on them. But yeah, that is Ferrexpo, done and dusted. Let me know what you think in the comment section. I know a few of you have it in your portfolio. Are you selling it? Are you holding it? Are you buying more into it? Let me know your thoughts and any other companies you want to see. I do have a list that I am working through of a lot of your suggestions, so thank you for that. And plenty of you'll be seeing new companies in the coming days and weeks. See you then. Bye-bye.